Good evening and a very warm welcome to First Issues. Last Friday, the First Issues team, along with other members of the media and the financial sector, gathered at the Gaborone International Convention Center to witness the culmination of months of hard work and strategizing condensed into the presentation of FNB Botswana's financial results and dividend announcement for the half year ended 31st December 2014. In his presentation, the Acting Chief Executive Officer, Richard Wright, gave an economic overview that encompassed, among others, GDP performance, inflation, as well as foreign currency markets.
Total GDP grew at 4.8% in 2014, which is attributable to mining, which grew at 5.5%, and non-mining, which grew at 4.7%. We expect the GDP to grow at 5% for the next 3 years. Mining and services were the major contributors to the economic growth in 2014, growing at 5.5% and 8.2% respectively. We see that water and electricity declined by 50.7% over this period. Inflation remains within the medium-term objectives of 3 to 6%, printed at an historic lows of 3.6% in January 2015. We expect inflation to average at 4% in 2015. On a positive note, the Minister of Finance removed the crawl on the exchange rate peg. In effect, what this means is that the currency will stop devaluating. Recent adjustments to the puller peg have had no effect on the exchange rate. We expect the US dollar versus rand to trade at 11 rand to the dollar by the end of 2015, which implies that the US dollar puller will trade at 9.18 to the dollar, and the puller rand will trade at 1.20 rand. The bank rate has been operating at 7.5% since December 2013. In February, the rate reduced by a further 1% to 6.5%, which is at a 25-year low. What is interesting to note is that banks' holdings of BOPSIs have reduced quite dramatically, and it's predominantly as the yield in the BOPSI declines, banks have been moving out of BOPSIs into high-yielding assets.
The environment for commercial banks in particular is a tough one for a number of reasons. Over the past year, the Monetary Policy Committee maintained the bank rate at a decade low of 7.5%. Despite a low interest rate environment, total credit expansion by commercial banks slowed down year on year from 20 to 15%. Liquidity conditions remained tight as commercial bank deposits grew by only 9% year on year as at October 2014. Up next, Chief Financial Officer at FNB, Boitumelo Mogopa, elaborates on the factors contributing to this difficult period and shares how they navigated these waters in the half year ended 31st December 2014. Welcome back to First Issues. Despite a challenging economic environment, FNB Botswana delivered what they say was a fair set of financial results for the half year ended December 2014. Despite an uncharacteristic 5% decrease in profit before tax, the bank's balance sheet grew by 11%, total advances grew by 16%, and the bank also saw a significant increase in transaction volumes that translated into an 11% increase in non-interest income. Boitumelo Mogopa shares how they navigated such an environment to produce such results.
You remember what I spoke about when I was painting the environment. I spoke about the tough economic conditions that are continuing. I spoke about the low interest rate environment that we are still on. It's going to get worse because on Wednesday, the MPC announced a further rate cut of about 1%. Tight liquidity constraints, we are seeing that in the last 6 months we saw that deposits are becoming very expensive now. So for you to retain and attract, you need to pay a little bit more as an organization. We are still under the moratorium on bank fees, if you remember. A year ago, the Bank of Botswana said that the industry should not increase tariffs. So that's still the case as we speak until next year, January 2016. We also know that competition is toughening. So I guess the environment continues to be tough, as you rightfully said. So we basically continue to refine our risk appetite in terms of where we're going to play. The beauty of defining risk appetite up front is that it allows you to stay focused in the segments and the products that you like to play in. And this is really based on past and future trends to say which areas are risky, which areas should you be playing in, and all that. So we do that quite a lot, and it's quite important because what we then put in is a good quality book. In an environment where price is not a lever to pull, we then needed to drive volumes. So you'll see that our balance sheet growth in terms of advances is up 16%, which was quite good. And also we drove transactional volumes. In my presentation, I spoke to the fact that we grew our number of customers. That helps us with the non-interest revenue. We also launched new products and services. I spoke about the automatic teller machines that we launched, the slim lines that we've also launched, as well as the star 174 hash platform that we've recently also launched in the market. So that on its own allows us to drive volumes in terms of transactions, and it's actually new money, if you like, because it means that clients can now deposit on these ADT machines 24 hours. Before that never used to be the case, but now they can do. So it's incremental and it helps us with driving our revenue. The other thing that I'd like to point out is the bank continues to be very innovative. Innovation is in the core of FNB Botswana. You know that we won an award about a year ago about being the most innovative bank in the country. When staff members come up with innovative ideas that either help us increase revenue or improve our efficiencies, we reward the staff members on that. So just last year, some of our staff members won the award of innovation of coming up with the star 174 hash platform, because it will bring incremental revenue to the bank and it's going to help customers, not just FNB customers, but as well as other banks' customers, to pay their bills using this platform. So innovation will continue, and that's as we see as the differentiator, to say that in an environment like this, what is that we can do to ensure that we keep our profitability continuing.
In an environment like this, and as masters of survival, I should say, how would you advise consumers, your customers, to navigate this tough environment?
Just reflecting on the consumers, the trends that we are seeing around consumers is that they are still quite under pressure from a borrowing perspective, and they are basically struggling to save also. And I think if you remember, civil servants haven't received an increment from a government perspective for a very long time. So naturally that puts strain in the consumer. So I guess what we can say to the consumer is to continue to be very cautious about borrowing, because as you know, borrowing can get quite expensive, particularly unconventional borrowing that is out there. We would like to advise the consumer to be very prudent around their borrowing and be very cautious around their borrowing. Also, I think it is said that even though you don't necessarily earn a lot, saving is still quite important. They do say that saving 10% of your earnings every month will always get you there. So I think even though it's difficult because the disposable income for consumers is under pressure, saving is still quite important. The other advice that we'll give for the consumer is now as a bank we are driving e-solutions, so using cell phone banking platforms, using online banking platforms, using automatic teller machines. So consumers don't have to come to the branch. First of all, it wastes time. Secondly, it's not particularly cheap. So the bank is on a bricks to clicks strategy to allow for convenience for customers as well as saving money from a bank touch perspective. So I think that's another takeaway that I'd like to give to the consumers going forward.
In which ways does savings benefit the consumer? Many consumers are advised to save, but they don't necessarily can't relate with as to why. Is it for an emergency fund? How exactly would this really improve the situation for your customers?
Saving can start from having a poloko account, a savings account for a rainy day. Savings can be, do you have a pension fund as an example? Saving can be, do you have an investment fund? Depending obviously on the subsegment of the client. Saving is advised for all customers across to make sure that you survive on a rainy day. Let me give you an example. You're a consumer, you are working, you don't save. The next thing, there's a death in the family. What are you going to do if you don't have any savings? If you don't have any funeral benefits, if you don't have any pension, what's going to happen to you? So is that saving for the rainy day to ensure that, when hardship comes, you are cushioned to survive.
FNB continues to be very comfortable with their market share and very soon will be launching a campaign that will draw even more customers. What is our guests' response to those who are of the view that bank charges are not at par or equivalent to the quality of service offered to consumers?
There's different ways in which we serve our clients, and there's different platforms that can help our clients with convenience. So I think what we're going to be focusing on as a bank is to ensure that we provide convenience. So I already spoke about the platforms that we have, cell phone banking platform, 24-hour ADT and ATMs. Now, this not only serves you better, but it's very convenient because you can go to that ATM and platform anytime, 24/7. It doesn't have to be between 8 to 5. Secondly, because of the strategy that we are pursuing in terms of what we're doing at FNB, we have separated sales and service. Before, one person used to handle service and service at the same time. Now we believe that for us to focus and be razor sharp around really service provision in this bank, we separated the roles for staff. So if you walk into a branch now, you'll be met with somebody who does purely service and met with somebody who does purely sales. That's another way that we are saying, how do we action this strategy that we are on around making sure that service is our differentiator. We have successfully landed segmentation. So segmentation allows the bank to say, okay, out of my client base, let me try and group them in a homogeneous manner so that I can serve them accordingly and give them exactly what they need. You can't brush all the customer base with the same brush. So right now we've got a consumer segment, we've got a wealth segment, we've got a business segment with different needs and different service models. So we are applying those now to the different segments to ensure we are razor sharp around what they need and what we need to offer them.
Quality customer service happens to be a major focus for FNB for operating in these prevailing economic conditions. A new strategy presented by the acting CEO at the half-year financial results announcements.
To be a customer-centric bank, we must deliver solutions and services to our customers competitively and efficiently. First National Bank is unique in the marketplace in that we manage 3 brands, namely First National Bank, Westbank and RMB. In terms of the FNB, in terms of getting the bank towards to being a customer-centric bank, we segmented the bank into business, consumer and wealth for First National Bank, for Westbank, business and consumer, and for RMB, they concentrate purely on the corporate segment. The operating model for a customer-centric bank revolves around sales and solutions, services, people, mining big data in order to drive sales, to improve efficiencies, risk management and governance, and innovation. So, what have we achieved to date in terms of the new strategy and the rollout of that strategy? In terms of the First National Bank brand, as I articulated, we have segmented the brand into consumer, business, and wealth. In terms of consumer, we have segmented the segment into Smart, Gold, and Platinum. We refreshed the value proposition, and we're about to roll out a value proposition that is unequaled in the marketplace. So please watch this space. What have we done in wealth? So in terms of transactions and invest, we have reviewed the qualifying criteria for customers to qualify for to enter private clients. We've segmented the wealth segment into affluent, high income, and high net worth. The objective there is to be able to put the resources into those various segments and to drive them separately. And we've established a service suite with the sole purpose to improve our turnaround times and our service to our clients. In terms of business segment, we've introduced a new sales channel, business outbound sales. In terms of service, we've introduced a business desk for general queries. We've also installed a centralized email portal for customers in terms of requests, instructions, and queries. In addition to that, what we've also done is we have implemented a post-visitation quality assurance, exactly the same as when you take your car for a service. You get a phone call from the service provider to ask you how did you experience your service. We're doing exactly the same within the bank. In addition, we have introduced the business debit card, and the rollout of that has been very successful. And finally, we introduced ADTs, which is a self-service deposit ATM for business customers and for the consumer. We've now embedded Rand Merchant Bank within First National Bank Holdings. We have segmented this business into three main areas, namely global markets, which is the trading activities of the business, corporate banking, which is trade and working capital facilities, transactional banking, and custody. And IBD, investment banking division, is predominantly corporate finance and structured finance. This has been bedded down and is beginning to work very well.
We're not done talking to FNB's Chief Financial Officer, and we'll be right back. Welcome back to the show as the CFO of FNB elaborates on the tough operating conditions commercial banks currently find themselves in and the solutions they as a bank have come up with. In her presentation at the bank announcement of their financial result on Friday, she said part of their plan to survive the current environment is to sell more of their products to their customers. We wondered whether this would not adversely affect consumers' ability to save.
We would like for our clients to own a lot of our products, because what you will find in this market is that a lot of our clients are multi-banked. So you find that a client has a current account with FNB, but they've got a savings and a loan and something else elsewhere. So what we're saying is that because we've got this database and because this client likes us from a current account perspective, why don't we also entice them to a savings account, to a credit card, to a loan, to online banking, to a cell phone banking platform. That's sort of dynamic. So I think what we are saying is that we have the database. We're sitting actually on an opportunity to make sure that our client likes us even more, because the products that they've gone to get elsewhere, we have them internally. So let's make sure that we cross-sell them to the client.
So the vertical sales index won't impede a consumer's ability to save?
No, it won't, because if you have a client who has a current account with you, why can't they have a savings account with you and not elsewhere? Why can't they have a credit card, cell phone banking platforms, online banking, a personal loan with you and not elsewhere? So it won't impede their clients from saving.
We conclude our discussion at this point, but let us quickly revisit Boitumelo's presentation to recap the major points from the FNB Half Year Financial Results announcements before we say our goodbyes.
Just in terms of the highlights, advances growth at 16% up. We saw an increase in non-interest revenue by 11%. Cost-income ratio at 41.25%. Profit before tax down by 5%. Return on equity at 31%. And dividends per share kept at 5 per share compared to last year.
After the presentations, various members of FNB's Executive Committee fielded requests for clarification and questions regarding the bank's response to the current environment from the industry players present at the event. This is how the session went.
I would like to know the possible effects of the bank rate reduction in profitability for the next half. And how will the bank expand its profitability given the rate reduction and liquidity conditions in the market?
The bank continues to look for diversified means of actually funding itself. Fortunately, as you've already said, the bank has a lot of customers. So we have a very large customer base, which helps us in terms of how we fund ourselves. So as much as we are facing this liquidity squeeze, we still remain very well capitalized and highly liquid, and we continue to look for diversified and cheaper ways of actually raising funding. In terms of how the rate cut will affect our profitability, it is indeed expected to have an impact on our profitability, especially on the asset side. But as my colleagues have already pointed out, we're trying to reduce over time our reliance on interest income and diversify into non-interest income revenue sources through launching of new products, as well as driving transactional volumes.
2 questions. Firstly, it's on your impairments and advances that went up 55%. May you kindly just run over your explanation of why it grew 55%? I didn't quite catch that. And then secondly, on your cost to income ratio, do you have an internal threshold for that? Like at what level does that start to become concerning, the rising trend in the cost to income ratio?
With regards to the impairment line, as we already alluded, when you see that there's pressure in the economy, it's very, very prudent that you start looking at your portfolio and review your methodologies. We mentioned that we actually looked at our methodology with regards to West Bank and property, particularly on the home loan space. As you are aware, in the property market, you've seen that purchase prices are actually way below the current open market values. So as a bank, we then became proactive and reviewed our impairment policy. Hence the reason why we've got a 55% increase in the impairment line. It's actually saving for a rainy day.
It is now time for the stock market review, courtesy of the Botswana Stock Exchange.
This report brings you the market performance for this past week. We start with our indices, the domestic company index and the foreign company index. The domestic company index has increased by 0.84%, while the foreign company index had decreased by 0.03%. Total turnover in this past week was at 17.2 million pula, meaning that on average 3.4 million pula worth of shares was traded on a daily basis. Total number of shares traded for this past week was 2.8 million shares. Let's have a look at the 2014-2015 year-to-date market comparison. The domestic company index had increased by 2.2%, and it has only increased by 1.04% in 2015, while the foreign company index had increased by 0.01% in 2014 to this date, and it has decreased by 0.2% in 2015 to this date. This basically shows a weaker market performance in 2015 as compared to 2014. Let's have a look at the exchange-traded funds performance for this past week. The beta had increased by 1.50 thebe to close the week at 44.15 thebe. The new gold did not trade for this past week, hence closing trade at 113.80 thebe. New plat had a notable decline in price of 4 pula to close trade at 113 pula. This is what we had for you. From Botswana Stock Exchange, I am Amogalan Temba.
Like our guests have shared, a fair set of results indeed. Until next week and another issue of interest, I, Nametsa Samakula, the team behind First Issues, and our sponsors, First National Bank, wish you a good night and pleasant viewing.